Hey everyone, and thanks for jumping back into the precious metalverse. Today, we're going to talk about gold, and we're going to do a broader outlook, but I also want to talk about the risk metric for gold. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, as you guys know, I have been fairly bullish on gold for a number of years. Of course, watching it go up isn't always that exciting because of how long it takes for it to actually move. And I think a lot of crypto investors would frankly rather watch paint dry. But with that said, it doesn't mean that it doesn't hold a potential spot in a well diversified portfolio, as it does have fairly impressive bull markets from time to time. Now, you'll have to forgive a lot of millennials for not necessarily believing that because, well, for the last 10 to 20 years, it hasn't really done a whole lot. Um, if you were to go back all the way to, you know, 2011, the price of gold was, not that much lower than it is today, right? $1,800. And today it's 2,700. It was 13 years ago, right? Almost 14 years ago. And so it makes sense why there is this investor mentality for a lot of people today to kind of like scoff at it. But I think you can understand, and this is what we've been talking about for a number of years, right? I think you can understand why there are plenty of investors who have been around investing for longer, right? Who've been around the block a little bit longer, that know that gold is actually capable of some fairly impressive bull runs once it really gets going. And I think that point can be missed on a lot of people. Now, if you're into crypto, you're probably used to these 4-year cycles, right? But when it comes to precious metals like gold, you can see that the bull markets for it can actually last a number of years. For instance, in 1999, gold bottomed out and it went on a bull run that essentially lasted for about 12 years. And yes, there were some pullbacks along the way, right? If you guys remember the financial crisis for the S&P 500, this is what it looked like for gold. If you remember the dot-com crash for the S&P 500, this is what it looked like for gold. So there are investing environments that allow gold to occasionally go on these macro bull runs that take place over the better part of a decade. And that's not the only example. You can also look back over here in the 1970s, which also happens to be a period of recurring inflationary waves, where gold also went on a fairly impressive bull run. And it really started out here back in January of 1970. It went up. There was a pullback in 1975 through 1976. It lasted about a year, it looks like. About a year. And then the market just kept on going. And then the gold did not actually top out until December of 1979. So you're essentially talking about, December of 69 to December of 79. Again, a decade long bull market. And what I keep saying, right, what I've stressed in a lot of the videos that I've done on gold over the last several years, and I mean, I did a video on it 4 weeks ago, did a video on it a few months before that, is that it's going to be easy to try to fade it, right? Because it's moving quicker than I think a lot of people have actually seen. And there are probably going to be some nasty pullbacks along the way, right? When you zoom in to some of the pullbacks that gold actually had throughout this macro bull market, from 1999 until 2011, there were some times where gold dropped like 26%, right? In the financial crisis, it dropped 35%. And there's certainly pullbacks that were, 14 to 15% pullbacks that actually lasted several months. But what did they all have in common? With the exception of the financial crisis, gold stayed above its bull market support band for the entire bull run. The only time it went below it on a monthly close was in October of 2008, once the recession was really getting underway. But it had another monthly close the following month, right back above its bull market support band. Now remember, for gold, the bull market support band is not a 20-week SMA and a 21-week EMA, right? The weekly moving averages for gold are practically useless. In this case, I think it makes a lot more sense to use monthly moving averages. So this is the 20-month SMA and the 21-month EMA. Now, again, that might be frustrating for people to look at such long time frames, but it's one of those things where, you know, again, if you have a small percentage in your portfolio and you're just slowly watching it go up over a long period of time, it can help hedge you if there are larger drops in other assets that you own, right? Like if the cryptoverse doesn't go the way you think, or if there's a larger pullback than you're planning, having something that's not necessarily highly correlated to crypto can be helpful. You know, if your definition of diversification is to just have Bitcoin, Ethereum, and a basket of altcoins, and that's all you essentially have, you should know that they basically all move together, right? They're all fairly highly correlated, right? And actually, you can see that over here if we go over to the to correlation coefficients. Sorry, I clicked on the wrong thing. If we go over to correlation coefficients, what you'll notice if you look at crypto, stocks, and metals, total market cap and Bitcoin and ETH are very highly correlated. And for that matter, the S&P is too over the last 60 days. But there are things that are not as highly correlated over longer periods of time, right? So if you were to look at it, say 365 days over the span of a year, you can see that, you know, total market cap is fairly highly correlated with Bitcoin. Let's just take a look at Bitcoin, right? Bitcoin is fairly highly correlated with Ethereum and the S&P, right? But there's not really a strong correlation with the dollar, and gold is 0.72, right? Which is actually a lower correlation than the S&P. And silver is 0.7. So there is some justification for having, you know, a well-diversified portfolio. Now, of course, a lot of newer investors are going to actually scoff at this. And honestly, I would have been one of you guys back in 2019. But I think as time goes on, I think people become they become, you know, more risk averse, and you know, I've said for a long time, I think gold is entering into a pretty impressive bull run. So I will not apologize for those views. I mean, gold has been continuing to move up. And so what I would say is this, right? Unless you get a really bad recession, and even in that case, as the financial crisis showed, it still kept on going. Gold should spend most of its time above its bull market support band, right? Which right now currently ranges, right? If we were to go take a look at it right now, currently ranges from 2162 to 2218. 2162 to 2218. Now, the hard part with this kind of stuff, right, is, you know, there's a lot of investors that keep trying to sell in anticipation of a dump, right? And they, you know, they'll sell here, sometimes they maybe even get the top right, but they don't actually buy it back, right? They'll sell, and then before you know it, the market just keeps on going higher without them. And so the question is, what if, and we've talked about this before, right? But what if we had a gold risk metric? And I believe I talked about this maybe, you know, many years ago, to follow. And, you know, we have one on the Into the Cryptoverse website. Kind of like, you know, there's the Bitcoin risk metric, there's the Ethereum risk metric. We have one for the S&P 500. And of course, you know, we have one for gold as well. And so when you look at something like this, it can be very tempting to say, well, it's overbought and it needs to drop, right? How many people have been saying that for the last 6 to 12 months, right? It's overbought and it needs to drop. And it just keeps on going up. It's the same thing. I'm going to work it in. It's the same thing as the Bitcoin dominance chart, right? If you know what I'm talking about. If you look at the Bitcoin dominance chart, I cannot tell you how many people over the last 3 years have told me that the reason why Bitcoin dominance won't go up is because the RSI is overbought, right? And you look at it today, and the monthly RSI for Bitcoin dominance is 66, right? It's never really stopped going up. Now, if you looked at it on a weekly time frame, yes, it's gone into overbought territory, but that hasn't stopped Bitcoin dominance from going up. The same thing could be said about something like gold, right? Yes, it's overbought, right? I don't think anyone's trying to argue that point. Yes, the weekly RSI is 81, right? It's getting pretty heated. You know, no one here is denying that, right? And if you were, watching these videos, a few weeks ago and a few months ago and a year ago and 2 years ago, then even if gold does have a pullback, you're still well up on your position, unless it's a catastrophic pullback, right? You're still doing pretty well. And even in these cases over here, where you did have, gold get overbought to even a higher level than it is right now, it still just basically consolidated and then continued to go up, right? I mean, so it goes to show you that using something like the RSI is better off used as confluence with many other indicators than something that you should use by itself, because things can stay overbought for a long period of time. Look at this bull market here. Look how many times gold, went up to weekly RSIs that were even higher than where we are right now, and it did not stop the bull market, right? The bull market just kept on going. Yes, there were pullbacks, but the bull market just kept on going. So, what I would say is this, right? First of all, I would argue there's going to be a pullback, right? There's going to be a pullback at some point. Who knows though? Maybe gold will go tag 3K before that happens. I really don't know. There will be a pullback, but my expectations are that it should hold above its bull market support band, which again is the monthly one, not the weekly one, right? Don't go over to TradingView. I should probably publish the monthly one as well. I'll try to do that for ITC members. But you don't need, I mean, just go over to a moving average and put on the 20-month SMA and 21-month EMA. Like, it's not that, it's fairly simple. All you have to do, if you want to recreate it, is just go over to indicators, type in moving average, right? And then you can go over to the to either an exponential or a simple moving average. You click on that, and then it'll pull it up, and then you can basically set what what you want it to be, right? Whether you want it to be like a shorter term moving average, a longer term moving average, right? Like, you can come over here and go to inputs and say, all right, I want it to be a 20-month moving average, right? And so the time frame I'm using right here is the chart, because I'm on weekly, but because we want it to be a monthly, I'm going to go ahead and select monthly on that. And then it'll just set it to the monthly moving average, right? So now if I get rid of the gold bull market support band, you can see that we now have the 20-month moving average. So again, you have no excuse not to be able to add it to your own, TradingView chart, because it's actually fairly simple. And I know a lot of you guys are like, why has been showing this? Complete waste of time. But I have found throughout the years, there are a number of people that'll watch this stuff that would actually really like learning about some of these simple things, but no one's ever taught them, right? It's kind of like, it's sort of like when you're in school and someone's like, how could you not know that? And it's like, well, it's simple. They've never been taught, right? So sometimes it just takes a couple minutes to show someone how to do it, and then they know how to do it, and they don't have to wonder how people do this all the time. Again, it's a segue, but I just wanted to, show you it's not that hard to make moving averages on these charts. So what I would say is this. At what level does it become a little bit more cautious, right? Again, there's a difference between a standard pullback and a larger pullback, right? You see here, right, these larger pullbacks, especially the financial crisis, there's a difference between that and longer bear markets than just getting sort of a little pullback in here. So there's a gold risk metric that we have. And right now, the risk on gold, according to this model, is 0.688. 0.688. Which is it's a little high, right? But it's also not screaming, major multi-decade top either, right? For a major top, you would probably expect it to be much higher, right? 0.8 risk at the very least, 0.9 risk, even all the way up to 1 risk. So for someone like me who's been bullish on gold for a while, and I have, I have position in gold, I've added to it occasionally, I have to ask myself, at what point does it become, a little too hot for my liking? And I think, if you look at something like this, even 0.7 risk is still 2750, right? 0.8 risk is going to be right around 3K. So you could argue that if gold were to go above 3K and especially up to 3,500 in the short term, it would be getting very, very heated. Now, if it takes it another year to get there, the risk might not be that much different, right? The market's okay with gradual and structural moves higher. What it's not okay with is parabolic moves higher, right? When you get a parabolic move higher, then you get a crash, right? So as long as gold doesn't do that, then it would be more likely that you would just get a modest pullback whenever there is one. So this is something that I think is worthwhile to follow. I will continue to follow it. But again, I got to be honest with you guys. Like, my expectations for gold, as I've been saying, is that it just continues to move higher for a number of years. And yes, there's going to be some pullbacks, and it's probably going to make people second guess things and be like, well, is that it? But I still think there's quite a long ways to go. If you look back at this, and we've talked about this as well, right? If you look back at the prior trend, and I've noted this in the last video and the one before that, it almost looks like maybe the pattern is repeating, just sort of a more gradual version of it, right? Where you go from undervalued to overvalued, and then you come back down to the fair value, right? Same thing, right? Go from undervalued to overvalued, and then come back down to the fair value, and then you go into another major move. I almost wonder if that's what we're in right now, like a multi-year move that, yes, in the short term is getting heated, but over a longer period of time, if we're looking back on this chart in 5 years, I have to think that there's a higher probability that gold will be, continuing to move way up here than it would be, way down here, right? So that is just my general expectation right now. So I do remain bullish on gold, as I've said many, many times. And what's really impressive about this gold rally right now is that it's actually going up with the dollar, right? A lot of times gold and the dollar are inversely correlated, right? I mean, I don't know if they have been over the last year. If you look at the dollar and you go all the way over to gold, yeah, there's been a negative correlation, not strongly negative, but negative 0.27. So it's been inversely correlated. But if you look over the last 30 days, I imagine they're highly correlated. The dollar and gold, well, maybe not highly, but they're positively correlated at 0.45. They've both been going up, which is different than what you normally see. So I think the fact that gold is rising into a rising dollar is very telling as to how bullish gold actually is here over the next several years. Because I am of the opinion, and I could be wrong, but I am of the opinion that gold will or that the dollar will continue higher through the end of the year, and then it'll go down in 2025. And if the dollar starts going down, that should be another tailwind for gold. I mean, if gold's going up while the dollar's going up, I guess you could try to argue that it'll go down if the dollar goes down, but I don't think that'll be the case, right? I think if the dollar goes down in 2025, I think gold will just keep going up. I think gold is sniffing out some policy mistakes. I think that's what it's sniffing out right now, because you had a rate cut. You had a rate cut not too long ago, and this is what I warned about, right? I said, look, guys, the Fed's cutting 50 basis points, and you can't necessarily blame them. They're going to get blamed either way, whether they cut too late or cut too soon. And in the short term, the market has not liked the rate cut in terms of the long end of the yield curve. Think about how many people were hell bent on saying that rates would drop, the long end would drop after rate cuts, and therefore just wait to buy a house after the Fed cuts rates. The Fed cuts rates, the long end goes up. Why is that? Well, because the market at this point in time is more worried about growth reaccelerating than it is things falling apart. Because if the economy were falling apart, the long end of the yield curve would be going down, because then the long end would be, fearful of a recession, right? But because the long end is going up, you could argue that the long end of the yield curve is doing what the Fed is unwilling to do. If the Fed's not going to do it, the market will do it for them. And that's probably one of the reasons why, crypto for the last, few months hasn't been doing so strongly, right? Because of monetary policy. And this is what dictates Bitcoin dominance, just to get it in one more time. So all of this, though, is a tailwind for gold, right? Because think about it, right? I mean, it's kind of like, do you guys remember when we talked about Bitcoin dominance 3 years ago for like one of the very first videos we did on sort of talking about a macro multi-year uptrend on Bitcoin dominance? And what did I say? I said Bitcoin dominance goes up no matter the direction of Bitcoin USD, whether Bitcoin goes up, whether Bitcoin goes down, doesn't really matter. Bitcoin dominance is going to go up. So you can hold Bitcoin, maintain exposure to the upside while minimizing your downside risk. The same thing can be said right now of gold, right? I mean, if you look at either scenario, right? Either scenario one is that the Fed's making a policy mistake and they're cutting prematurely, right? If they're cutting prematurely, and the economy's fine and people are wondering why are they loosening up monetary policy this quickly, you would think that would be bullish for assets in general. If the 10-year ends up going down next year and there's not a recession, that's also bullish for gold, more than likely, right? Because it's looser policy then. If the Fed has induced a recession sometime in the next couple of years, yes, gold will probably sell off in the short term, just like it did in the dot-com era and just like it did in the financial crisis. But it would still probably continue on its journey, right? After it gets that scare out of the way and just continue on its longer-term bull run. So it just seems likely to me that when we come back to gold at the end of this decade, right? At the end of this decade, it's probably going to be higher than it is right now. I would guess. That's my guess. And I've been saying that for years, right? I would say that by the end of the decade, it'll probably be quite a bit higher than it is right now. In the short term, who knows? I don't know. I would say for gold, dips are probably going to be fairly attractive opportunities, right? So the way I would phrase it would be something like this. I don't really think it makes sense to sell in anticipation of a drop in the gold market, right? I wouldn't sell and hope that the market drops and then just get left behind like anyone has been getting trapped into doing ever since this breakout occurred. And you guys remember what happened when gold broke out? Same thing that happened last cycle with Bitcoin. Bitcoin market cycle, mid cycle. What do I call it? The mid cycle top, right? Sort of the market cycle's halfway point, that mid cycle top, if you want to call it that. When gold broke out was March of 2024, and that's when Bitcoin put in that high, whether you like it or not. That's exactly what happened in 2019. So yes, it's easy for Bitcoiners to give gold a hard time because normally Bitcoin outperforms gold. And over a long enough period of time, it probably will continue to outperform gold. But when gold breaks out of these channels, there's nothing wrong with pivoting as an investor and saying, you know what? I'm a Bitcoiner through and through, but there's going to be times where gold outperforms Bitcoin. And gold has been outperforming Bitcoin since March. Clearly. There's nothing wrong as an investor with saying that, look, market conditions change. And, sometimes this happens. And the same thing happened last cycle, right? Bitcoin cooled off for 9 months after gold broke out. And then Bitcoin caught back up. There's nothing wrong with that. It's just how the market works. So I just want to put this video out there and say, I don't know when I'm going to do another video on gold. Maybe the last one was like 4 weeks ago. The one before that was several months before that. But over the long haul, I think we will see gold continue to go higher. I think it's easy and I'm in the Millennial group, guys. I'm right there with you. I was born in 1990. It's not like I've been privy to a major gold bull market where I was, invested for a decade, right? I was 10 years old when this bull market started back in 2000, right? By the time the last gold bull market ended was 2011. I was a junior in college, right? I wasn't investing in gold. If you're a junior in college and you're investing, I tip my hat. You're further along than I was at that age. I was interested in engineering and mathematics and physics, aerospace, nuclear. Like I was interested in stuff, but I wasn't trading the markets, right? I mean, frankly, I didn't have money to trade the markets. I was a broke college student. So I don't think, I think a lot of us, if we had lived through that, our opinions on it would be different. But instead, a lot of us were just kids when this was going on, right? We were kids. And so then all we've really known is when Bitcoin launched, and Bitcoin has been going up a lot and outperforming gold. But you can see that gold has had a really long consolidation period that has spanned, over a decade. And now it's finally starting to break out. And it just seems likely that there will be a continued move. The thing that the one thing I want to sort of end the video on, just because I don't really want to just sort of paint it as an up only view, um, because the reality is it's not, right. There's going to be some pullbacks, but remember what to look for: the bull market support band for gold, right? Look for that, and it's still. I mean, look, gold could get a really big pullback and it still be structurally fine. If you look at, because we've looked at this breakout right here a lot and compared this breakout to that one, but what if we compare the current breakout? Okay, what if we go here and compare sort of this breakout to this one, right? When that happened, even when the breakout occurred, right? And maybe you could say that that pullback right there is similar to that one right there. If you assume that that's the case, from that low in October of 2008, gold still rallied for about 35 months after that before topping, right? So from here, from November of 2022, we're currently month 23, meaning that even if it doesn't span the rest of the decade, right? Even if the bull market doesn't go for the rest of the decade, even if it were to go another, to 35-month point, that's going to get you to Q4 2025, which still leaves, plenty of time, I think, for gold to move higher. And again, I think the bigger risks is, there's going to be the uninversion of the yield curve soon. And so there's going to be some type of recessionary fears, whether they manifest or not, as anyone's guess. That's probably going to be the biggest test for gold. But even then, I think it's going to shrug it off, right? I mean, it might drop maybe back down here at some point. I mean, by the way, when I say back to the bull market support band, you might be thinking, oh, that means gold's going to go back to 2100 or 2200. Probably not, right? I mean, by the time gold actually drops, maybe it drops to where it is today, right? Or maybe it drops and it, the bull market support band continues to go up, and then it sort of tags it up here at 2500. It's impossible to know, you know? It's absolutely impossible to know. And so I would say it's probably a better idea to have a plan if there's a drop, right? So not to say, all right, I want to sell in case there's a drop, but to say if there's a drop and I want to have gold, that's where I'll add to my position. That's how I'm thinking about it, and that's how I've been saying. I've communicated that with you guys for several years now, and it's interesting because I feel like I've been saying it for a long time, throughout this whole process, and it seems like gold's really starting to move here. Um, the only thing I would sort of look towards in the short term, besides what I just mentioned, is that last cycle when gold broke out, if we do just compare it to sort of the last sort of mini cycle when gold broke out, it rallied about 50% before then consolidating for a couple years. So far, this rally is about 30%. Okay, if it were to go up 50%, that would put it 31, 3200. Not that much higher than where we are, but it would send it just a bit higher. Furthermore, when the breakout did occur, gold rallied for about 14 months. Right now, gold is in month 7. So again, that perspective would sort of say that, it could still rally through at least the middle part of 2025. But those are shorter term moves, right? This is the thing, right? You could have a scenario where gold does something like this, right? Where it's sort of just in a channel for the most part moving up, and it just kind of zigzags its way to the top, right? So and then here's your 2022 bear market. Maybe it just continues to do something like this, goes up, and then you get a 2026 bear market, and then it just goes up into the end of the decade, right? I could very easily see something like that playing out, because again, there are inflationary dynamics going on. There's also been some deflationary aspects of certain markets, but this is where I think things are headed for gold. This is where I think things are headed, and I'll probably won't do another video update until either one of two things happen. Either if gold hits 3K, I'll do another update, or maybe if it's approaching it, right? If it's really close and it's approaching it, or if we drop back to say 2,500 or something, maybe I would do another update. But the reality is who knows how long that's going to be. But we will continue to follow this. And then silver is another example of one that's actually starting to play a little bit of catch up. So silver is sort of like the Bitcoin dominance narrative. And you know how I keep saying dominance for Bitcoin is likely going to top by the end of this year? Think the same thing potentially, but about gold and silver. I could see gold dominance start to turn around in early 2025, especially if the money printers get turned back on. Then you could see silver start to outperform for a little while. But anyways, if you guys like the content, make sure you subscribe, give the video a thumbs up. Again, check out Into the Cryptoverse Premium at intothecryptoverse.com. You can get access to the gold risk metric as well as many other things. We talk about a lot of markets there, precious metals. We talk about stocks and crypto, of course. Talk about the bond market, fixed income in general. But again, like the content. If you like it, make sure you subscribe, give the video a thumbs up. And I am curious, like, what do you guys think about the gold videos? Like, are they a nice break from the usual content? Is it nice because you have some gold and you're like, oh, what's going on now? Or is it just one of those things where you're like, yeah, that's great, Ben, but get back to talking about what we care about? I'm curious about what you guys think, and what you would really like to see more of. Because I do think I think a good investor, having a well balanced portfolio is a good idea. One caveat to precious metals is that, as bullish as they can be over really, really long periods of time, the stock market does tend to outperform, right? So if you are able to capture moves like this or moves like this, you don't just necessarily want to sit on your hands and go all in on gold or silver, because usually the S&P outperforms gold and silver. But there are periods where the reverse is true, right? Where you might go a decade where the S&P goes sideways, kind of like the S&P went sideways throughout the 1970s and throughout the 2000s, and gold's going up during that time. So it's a good hedge, right? If we go into an environment like that at some point, it's a decent hedge. And even if we don't go into an environment like that in the short term, it's still probably going to go up just with risk assets in general. As the dollar continues to be debased. But if you guys like the content, again, subscribe, give it a thumbs up, and I'll see you guys next time. Bye.